Okay, so I'm in a trade in AUD. Got in at a terrible fucking price because I had some really bad FOMO. Got in at a terrible price. But I'm holding it and I'm down $1,000. So this trade is fucking terrible, but I'm down. It's the weekend. The new 2023 starts next week. So I think they're trying to end the year bullish and fake everybody out and get more buyers into the market. But I think it's going to go lower. If we look at the weekly time frame or the monthly time frame, you have a huge downtrend, and then you can kind of see the fourth and fifth wave forming if you are familiar with Elliott wave. So if you use the fib, and analyze it, it just hit that 0.618 level, right? And then it retraced. Fuck, this is so hard to do on the phone. Fuck. Where is the arrow? But anyway, so if you're familiar with Elliott wave and the 5 waves, you see one wave down right here. Let me turn off the fucking magnet shit. Damn, I'm like nervous talking to the fucking phone. So if you're familiar with Elliott wave, you see the first wave forming, and then you see a retrace, which is the second wave. So 1, 2, 3, and then you see this third big wave move formed, and the third wave is always usually going to be the longest wave, right? So 1, 2, 3, and then you get the fourth wave. That's 4, and then so the fifth wave. So I think it's going to go lower. And then you can use this fib to map out the area of the end of the third wave, which lines up with that 0.618 level. And then you use the third wave to try to map up the fourth and fifth wave retrace and prediction, right? So yeah, you got the third wave, and then you got the fourth wave retracing, and then you got the possibly the fifth wave going down to that 0.27 level, right where that green area is marked. So do that. So that's like the overall trend of the market on a monthly, weekly time frame, right? And then we zoom in. So if we're assuming that we are in the fourth wave, and the fourth wave is forming or already formed and is about to head down, right? We got a huge trend line on the daily time frame. right here, the daily time frame. So that probably has a lot of weight to it. And then, so that's one confluence. Second confluence on a daily time frame or daily 4-hour time frame is this parallel channel that formed. And that's testing the resistance of that parallel channel. So that's another confluence that it could be rejecting that general area and then turning down, right? Another confluence. Is this retrace, which is hitting that 0.7-ish level, and that's kind of usually the highest retraces will go, maybe 0.786. If it goes higher than 0.786, it usually means it's just going in the opposite direction. But we're seeing a retrace at the 0.7 levels, which is another possible confluence, right? And then on top of that, we have another fib level on the 4-hour, and you can see that 0.27 area just got hit on the 4-hour time frame, right where that parallel resistance channel is getting hit. So that's another confluence. And then on top of that, you see the Elliott wave. Another Elliott wave formation, which is 1, 2, 3, 4, 5. And so that could also be another confluence to the peak of that area and that of this entire market. And then on top of that, another confluence is this imbalance that the market tried to fill. This imbalance right here, probably got a bunch of orders in this candle area that the market needs to fill. So we can see that it made it all the way up here, and now it's hitting the end of that area. So that's another confluence. And then what's another confluence on top of that? Oh wow, we can see another reverse trend line. Right here. Kind of right there, which should be used as another general area of confluence and resistance, right? And that lines up with that area right here. So that's another confluence. But yeah, so I think with that analysis, we could see a sell-off next week as soon as 2023 starts. And if I'm not forgetting anything, that's all the confluences that I have. Oh, and on top of that, you have a huge wick on the 1 hour. And if you get a wick like that, chances are they're going to come down and try to mitigate that wick, because there's a bunch of orders in that wick that they weren't able to close. which means that that's a good chance that if you see a wick like that and that big, it's going to come back down in that direction. So that's another confluence on the 1 hour. And then on top of that, we see moving averages are pretty oversold above the 200 estimate, which is the red line at the bottom, the red curved line at the bottom, which might be telling us that it's oversold and has some time to come back down. And then on top of that, we got RSI. We got some divergence on the 1 hour. Fuck. Right here. Dang, you can't even draw on this shit. Fuck. But on RSI, you can see it's making lower highs. But on the candlestick chart, you can see it's making higher highs. So when you see divergence like that, that could mean that it's running out of steam and potentially reversing. So I think if you add all of those confluences together, chances are that it's more likely to turn down and have a sell-off next week. So we'll see what happens.